Hot picks. Let's zero in on three airlines. Our guest does like the look of United. He says consumer demand, despite obviously disruption in travel to the Mideast and from that region, consumer demand looks strong. And the management team at United has credible long-term financial targets. We're joined by Tom Fitzgerald, analyst at TD Cowen. Thanks very much indeed for coming on the show.
Thanks for having me.
Start off with United, if you would. What's distinctive about this carrier?
We view them as having the most attractive earnings upside due to the combination of idiosyncratic tailwinds from the various initiatives management's pursuing, as well as the really attractive industry fundamentals that have been ongoing the last handful of years.
That's interesting. What has been good for the industry in the past 10 years? Just people crazy to travel, tourism boom?
Yeah, I mean, travel demand has been very resilient. International travel demand, where United is the leader among the big U.S. airlines, that has seen really strong growth coming out of COVID. There was some debate back in 2022, 2023 about whether this was just a short-term sugar high and pent-up demand from the pandemic, and that would normalize back out. But instead, we've seen a secular leg up in really strong, robust U.S. outbound travel demand.
And what are they doing in technology that's distinctive?
That's a great question, Andy. They've had a lot of really interesting investments on their mobile app, in improving, customer communications, customer overall experience. They're installing Starlink across their whole fleet, which should be completed by the end of next year. That starts to enable interesting opportunities on the advertising angle over the long term. And then, just kind of run of the mill on the cost side, whether it's on the management team and closing the books on their accounting faster than normal using AI, or using technology and things like predictive maintenance, or recovering from irregular operations. They tend to be very forward thinking on the tech side.
I'm just looking at the stock over 5 years. It has been something of a star. We've got a 1-year chart there, but over 5 years, I'm showing the shares up more than 80%.
They've had a nice run lately as the market started to appreciate the earnings upside for the business, as they've been implementing a lot of their long-term targets since the latter part of the 2010s, and now they're starting to approach harvest mode for all their work. So it's a really exciting time for the company, and investors are excited as these good things come in and they reap what they've been sowing. That should lead to a lot higher free cash flow conversion down the line.
Okay, our chart there is showing a number close to 64%. My Bloomberg screen is showing closer to 80%. And Delta. Delta, you like the look of this one. It hasn't been such a great performer as United over 5 years, but what has this company got going for it?
They remain the leader in premium, in corporate travel, and in profitability across the U.S. airlines. They continue to enhance their revenue diversity, which we saw was a major contributor to their resilience last year. It likely will continue to be a major contributor to their resilience in the years ahead. And this is in things like growing loyalty to the long-term targets, building that into almost a $10 billion business, building up their maintenance, their third-party MRO capabilities into a multi-billion-dollar business over the years ahead, and lowering the main cabin share of revenue down to 40% from 15 years ago. It was 60%, and that really helps to de-amplify the volatility of the business.
That's interesting. So the main cabin, I guess that's the people who are paying economy flights. Traditionally, it was 60%, I think you said, of total revenue, down to 40%?
That's their long-term goal, yeah.
Oh, okay.
Yeah, but that substantially, that really lowers the volatility of the business. I mean, those are the most price-sensitive customers. That's where there's more competition from low-cost carriers. So those type of things, it helps to build more durability into the model.
I'm lucky. I have a long torso and short legs, so I don't mind sitting in steerage on aircraft. But
that's great. It gives you a lot of optionality.
Yeah,
I'm the opposite. I'm pretty lanky, so I tend to always hit the bid on buying an extra legroom seat.
Yeah, my wife too. She's not having any of those seats crushed together. Finally, Alaska Air. This stock has struggled a bit over the past 5 years, but you see promise here.
I do, and I think there's been a lot of things clouding over some exciting developments there. The macro, which has affected the whole industry, and then Alaska being a predominantly a West Coast airline, they have more exposure to West Coast fuel benchmarks, which tend to be a little more volatile than the industry, and over the last 2 years have been much more volatile. But we think if you look through the noise over the long term, as they reap the benefits from integrating Hawaiian Airlines, which they acquired in late 2024, this is a 1 + 1 = 3 type of merger. It enables a lot of network optimization, turning Seattle into a long-haul global hub. And
no, did we lose Tom there?
Sorry about that. I think I hit the mute button. Reshuffling the deck to turn Portland into a connecting hub, take more share in San Diego, optimize their Hawaiian franchise. They're leaning into premium and loyalty. And if you think about, probably about 70% of their routes are on 1,500 miles or longer. And those routes historically show a much higher propensity for consumers to pay up for the premium products. So it dovetails really nicely with the overall secular backdrop right now.
Again, that's that old circulation thing. If you're on a long route, you don't want to be crammed in. Thanks. Just, Tom, we're almost out of time. Just tell us, you spend a lot of time looking at the aviation industry. Is there something that strikes you as interesting that the public just doesn't realize about this industry?
I think the gentrification from an investor standpoint is really, in the U.S. specifically, is really important to keep in mind. And historically, there were just always way too many competitors, not chasing too few seats. Now you're moving to a period where you're probably going to have 6 major airlines competing in the big markets, and with the discount carriers focusing on underserved, less attractive markets for the majors, which I think should de-amplify the volatility in their profitability, in their revenues, and give investors more conviction in underwriting investments in the space.
Thank you very much, Tom. I really appreciate it. Tom Fitzgerald, analyst at TD Cowen.